Hi, everyone, and welcome to the Thursday study group. I'm excited about this. I'm Gretchen Berry, Chief Marketing Officer of Bunny INS. And today I'm joined by another Berry, Dale Berry, a Bunny INS LTC specialist who has taken the unique step of going from primarily individual business to crossing over into group. So I think it's important for us to hear from him and how he did it. So today we're going to focus on how to identify and close group cases. And Dale's going to have some important advice to share. But before we get started with Dale, I just want to let you know that there's going to be a part 2 of this. So next month on June 18th, Lori Martin, another Buddy LTCi specialist, is going to walk us through how she manages a group actually through the enrollment process. So stay tuned for that. So, all right, let's get started here. Hi, Dale.
Hi there.
I think we should start this conversation by telling everyone a little bit about your background, because I know there's also a personal story here as far as long-term care.
Right. Well, I've been doing long-term care since 1988, so a few years ago. And I got involved with that when I was with CNA, selling there. And I was a senior life sales rep, as well as became a regional manager for them, assistant manager for them as well, doing life, long-term care, disability annuities. And my focus was long-term care with them as well. And I would talk to different groups and everything else. But in that, I really got an introduction to long-term care before we had the tax qualified, non-tax qualified plans and all of that. We had a lot of underwriting going on. And I worked with CNA for 15 and a half years. So if you need to know about the CNA products, I could tell you about that. They left the industry in 2003. And then that whole thing unraveled, and they sold our company to Swiss Re, and that all changed. And I went to Capitus Financial, and did work with Rich Kapesky and Linda Yankee and Judy Pettigrew and some other people at Capitus Financial, and worked with broker dealers as well as individual property casualty agents in developing business with them as well. So that's my background. My personal story was my father-in-law needed care at home. He was a very private person. We had no clue what was wrong with him. My mother-in-law took care of him in their home. He lived pretty much in the recliner with a sheet on it, and she'd bring the urinal to him and everything else. And it was not a comfortable situation, but he never let us know what was wrong with him. Eventually, he was about 6'3", about 250. She was 5'1", probably under 100 pounds. So caring for him, because they had no long-term care, I tried to get them to get long-term care in the early 90s, but he said, "We got it all taken care of, Dale." And of course, they did not. So she did that. And then after his passing, she had no clue where they stood financially. And so she asked me if I could look at their situation and find out what they can do, what she needs to do. And I found out that not only did he let his life insurance policy go, that he was at the pension he had with the teachers union was a life only pension. Therefore, his income was gone. And now she was going to be on Social Security. And I let her know that she had enough savings to stay in her house for about 2.5 years. And we would decide from there on what to do. So she did move in. We added on to our house, moved her in with us. She was fine for a while, but then had some health issues based on her caregiving for him. And then ultimately, on Friday at 4:00, she's in the hospital. And Friday at 4:00, they call us and tell us that they're going to release her on Tuesday to go do our long-term care shopping for where she's going to go. So we looked at all of the various facilities. I obviously was familiar with them, but we found a facility for her. My wife and I would care for her when she was here before that time. In fact, there was even a time when we had 3 people coming in to see her each day. And my wife walked in to see her, and she asked my wife if she worked here. That just crushed her. Now, luckily, it was up because of medication she was on and everything else. And ultimately, when she went to a facility, my wife and I would go visit her 5 days a week in the afternoon and evening to see her, be an advocate for her. And then we paid our neighbor to go over there twice a week as well to make sure we were there. So I
Wow.
understand long-term care well. I understand the situation and what it needs to be. And she ultimately, by the way, spent all of her assets down and went on to Medi-Cal. That's in California versus Medicaid in other states. And so I actually filled an application out, submitted it. And at that time, we were not below the $2,000 limit. So at that time, they let me know that I got to reapply in a month. And I did that and we got coverage for her. But then she passed away literally 2 months later.
Wow.
And everything else. So that was my personal story for that.
Wow. Yeah. I know many of us have stories like that. And I've heard you talk about that before. So thank you for sharing.
Yeah.
I appreciate that. All right. So let's switch gears here a little bit. And I wanted you to sort of walk us through how you first identify like a viable group case. What signals? Is there group size, industry, demographics, benefit? What is it that tells you this is somebody I need to follow up with?
Well, for me, I worked with property casualty agents for a long time, for over 30 years or whatever it's been. I worked with people in their deployment department. And for me, it's identifying somebody that is passionate about looking into long-term care, whether it's the broker or the actual HR person at the company. And once we identify that group, it's a matter of what size the group is, of course, where their side is thin. And we look at that. And as long as long as I have a responsive, active person that is interested in looking at the long-term care planning process and solutions, I am happy to look to that. So that's what I look to do, whether it's the company, the CEO, or the HR person. I just want to make sure that they are on board with learning about long-term care. And I do want to hear their story about long-term care as well.
So as a PNC person,
Yeah,
you're looking at your book of business.
right.
That's kind of where you're starting, right? Yeah.
Well, that's
Okay.
where the agents I work with, primarily with CNA, we develop property casualty agencies. And
Right.
so I've been in that world for a long time. So that was my natural fit for that, is that my referral source was going to them, talking to them about long-term care, whether it's individual, and it was individual, by the way, until about 3 years ago.
Yeah.
So I did individual planning for a long time and finding out what would be a right fit for them. And then I did sell earlier on when I was at Capitus, we did, Unum and we did MetLife on their plans and sold
Mhm.
those plans as well. So we did the group policy also.
So there's already sort of a trust factor there.
Right. Yeah. And
Yeah.
that's what it
You say
takes.
no.
It takes somebody to be you. Again, I want them to be responsible, even if they're new, as
Mhm.
long as they want to learn about long-term care, the process we go through, what we need, and then the great things that we have when it comes to group long-term care.
Right. Right. So, all right, then that's actually a good segue into my next question, which is clue us into what your opening conversation might be with like an HR director or benefits broker who maybe has never offered long-term care insurance before, which is probably a lot of them.
Well, my whole thing would be, again, I would want to find out from them. At first, I always ask about benefits they already offer and everything else. And then secondly, I want to find out if they ever encountered personally a story like this for themselves, for their family members or somebody else. And if this is something that if they've never looked into long-term care before, obviously we have a great opportunity when it comes to the group side with guaranteed issue to look into that policy. So my conversation with them would be, have you ever looked into long-term care, ever, individually or personally? And if not, you think this would be an added benefit for your employees if we did offer something like this? And then we'd look at that and find out the people that we'd have, the size group we have, and if we could do something for them.
Mhm.
And of course, what we love at the buddy system is obviously having guaranteed issue on the group side with the new plans versus the frustration of individual side and getting declines and rated policies.
Right, right. I want to ask you about about the product offering in a second. because you just reminded me of something. But before we get into that, once you've had that conversation and you have the group's interest, what are like the first few things that you want to know about them before you commit real time to building that proposal? Is there anything that's a disqualifier?
Well, I need to know, obviously, I need to know if they offer any other benefits to their group at all.
Mm-hmm.
You know, if they are offering benefits, is there employer contributions to any of that or not? I need to find those kind of things out. So I do want to find out what their interest is and what their funding is going to be for the case. There's going to be, for me, it's just looking at that and finding out, do we have a case or not? Is it a young group? Is it an older group? You know, what are we looking at when it comes to it? Do we have a lot of females or males? You know, what are we looking at?
Mm-hmm.
So,
And what is the difference? Like say it's a majority female organization. Like what might that conversation, why is that important?
well, it's very, very important, as we've talked about in the buddy system before, because as on the group side, we get really good. We not only we have guaranteed issue, but we have discounted rates because of the unisex rates that we offer on the hybrid side, on the plans we have. And so having that is a big fit. I'll tell you, when we look at the difference between male and female on the individual side, it's a big difference. So I do use the buddy calculators. I do show that in the system as far as what the difference is on females versus males. And we
Mhm.
have that discussion about that.
Right, right.
So
That's a good point. That's so you're keyed in on, so let's get to product then. I you're it sounds like you're sort of clued into uh a product. How do you determine that? Like, you're using the buddy system, you're using product buddy, the state, obviously, that, other demographics. Is that your primary process?
yeah. And by the way, the answer on the female side also, if we have a larger female audience on the group side, we have a much more likelihood of getting people to sign up on the plan. You know,
Mhm.
too often in the individual side of the house, it's the males that are saying, really don't need this. I'm just going to die. My wife will take care of me, that kind of thing. And the
Mhm.
females are the one that usually be the caregivers. So they're more attuned to needing this care on the group side as well. So
Mhm.
they'll be more apt to sign up for that.
Right. So that's another good segue. Because when the leadership team at Buddy, when we were talking about who would be a good person to do this for me to interview, and everybody said Dale. You got to have Dale on because you're known as a closer. I don't know if you know that.
Well, you know what? I don't know if I'm a closer or not. I will say that my one plus in life is I have used since I got to Capitalist Financial, we did a My Drive Google Excel spreadsheets because we work with people like UBS and Oppenheimer and Raymond James and all the big wirehouses and individual producers as well. And so we had spreadsheets on everything and we had a lot of, like Jason would do on his former life, did a lot of quotes and they went nowhere.
Right.
And so it's just a matter of, I use that currently still, besides the CRM system that we have with HubSpot and everything else. I use that to monitor my cases, pending and prospecting cases, applications being submitted, the communication that I have with people. I want to know when I touched that person last on a communication, on a call, a text, or an email. I want to know that. So I follow that regularly every day and look at that. And when I don't look at that, I can get lost pretty fast because there's a lot going on. So so that's what I do. I follow up with those cases. And the one comment I get from my brokers that I work with, the people that I work with, is I'm persistent. I don't want to be nagging to somebody. I don't want to be overly out on the top of things. So I will, tend to start off and I'll send a couple of emails or calls or whatever it is and ask them. And I always want a warm lead. I don't want an agent to say, I got a whole file here, Dale. Go through it. Just look at it and it's gold mined. Go for it. That never worked. I want to know if it's an important client for you, it's an important client for me, whether I don't care how big the client is and everything else. Let's talk about that. And I want you to call, introduce me, or email, introduce me by email, that client, so he knows my name, because he may be the property casualty guy or the financial advisor, and I may be the expert in long-term care. But when it comes down to making a decision, I may make all the recommendations I want to, and they'll turn to Mark and say, "So, Mark, what do you think? What do you think I should do?" Right?
Yep.
Because they're
Yep.
the relationship. They're the relationship
Yeah,
person. So you have to have that person in your corner when it comes to it. It's very
for
important.
sure. For sure. So when a group case gets stuck,
Yep.
what is in your experience, what do you think is typically the reason?
Well, typically because life got in the way. Typically something's happened. I had that recently with a situation where it got stuck because the person I was trying to do business with, their oldest daughter died
Oh,
suddenly. So
goodness.
that kind of stuff, life can get in the way, whether it's a wedding that happens or a death that happens or whatever. Or it could be with the enrollment people and benefits people. It could be that they're working on the enrollment for that group. And then we have to pass that period before we start our process,
Mhm.
because they're not going to get involved with doing, and we don't want them to get involved in doing long-term care, the new plan during their enrollment process, because it's a loss if you do that.
Right,
So
right.
my goal is to always, look at that. And I do send out my reminders to people. I'll send out so many emails and calls or whatever it would be. And then what gets their attention, like the group side, what gets their attention is the end of something, right? The end of the enrollment. The groups, for me, when I'm not getting a response and I put in a subject line, final follow-up, I get a call or an email. If I don't put
Yeah,
that in there, I don't get a response. It's like, oh,
right.
he'll reach back out to me in a month.
Mhm.
And so, but I put that in there, and I always say to the client, if you have no more interest in these follow-ups, just let me know. Or if you want me to put it on hold for 6 months or whatever, let me know. And I have closed cases. We have cases right now on the group side that we've worked on for 2 years, 3 years.
Yep.
So I don't let them go if they're an important client for that broker or that financial advisor, and they're still interested, but it's not the right timing for them.
Right. Yeah, that um sort of, are you still interested, or once it gets into the enrollment, we call it the
Yes,
last chance email.
yes, yes.
Yeah, it always tends to scoop people up,
It's
and
amazing
it
how it works,
nudges them.
because again,
Yeah.
we all have things in life. We're working, whether we're doing long-term care planning only in our life, whether we're doing property casualty only in our life, or we're securities business only. That's their world every single day. They already have 1,000 emails in their inbox. And
Hmm.
so I have to text them or call them because they're not picking up their emails, or
Hmm.
whatever it would be.
Right, right.
And
So when you're
then that's
dealing,
what happens.
yeah, yeah, when you're dealing with an HR contact who says, "Let me run this by the CFO or the COO," or "We'll revisit this next year," what is your sort of playbook for that then?
Well, for that would really be, for me, it's trying to get them to step into some kind of starter plan. I realize we can revisit this in a year, whatever it be, but we got dates of birth where we're worried about people getting aging in, and maybe somebody's going to age out of this process because they're going to be 70 or 71 and they're now gone from that platform. So it's always a matter of, I have to have some kind of urgency for them to be able to do something, because they may
Right.
just put it off. You're right. And obviously, we have all had people that became uninsurable. They were procrastinators. They wanted to get all the information, all the information, all the information. They did nothing. And now they had an event happen. They're on a certain medication now. Something happened now. On the group side, we have the luck of guaranteed issue. On the individual side, that case may be stalled or declined now. From the group side, we have opportunity. So I do have clients on our group side that are very, very interested in this plan. And if you have an advocate, the HR person, the CEO, the president, or an employee, like I have one case right now, she really wanted long-term care. She's in her 50s. She really wanted she has no long-term care. She likes the idea of simplified, guaranteed issue, plan. And I think she's still insurable, but either way, she would get a guaranteed issue policy.
Is
And I've
she,
had it.
was she a CEO?
No, she's not. She's an employee, but she's been there
Okay.
forever. And it was just
Okay.
taken over by somebody else.
Oh, got it.
So
Okay.
she brought it up, and the financial advisor is her sister. And so it moved forward with that. So
Wow. Yeah, we have had cases where I don't know if it was the CEO, but we've had, leaders come to us who are uninsurable technically. Um, so they're particularly drawn to the guaranteed issue, and they're still within that age range.
yeah, I mean, obviously, this is whatever we do on the group side. For the most part, it's not going to be the full financial plan, the full plan for
Right.
long-term care. It's
Right.
going to be a starter plan, but I'm telling clients always on the individual side and group side, having something is better than nothing.
Yep.
Because we never know when that event's going to happen. You may very well go through life and never need this. And by the way, I always tell clients, I hope you never need this.
Yeah. Yeah.
But it may happen. And of course, for men, having a hybrid policy is both worlds. It's the best of both worlds because
Right.
for them, it's like, I don't need long-term care, but okay, if it has life insurance to it, then maybe I can do it.
Right. Right. And there's that sort of starter plan idea. It gives them something. Yeah.
Yeah. And I love, of course, the standard plan with the 5%
Mhm.
inflation on in California benefits in Utah.
Right. Right.
That's wonderful.
Right. Okay, let's get a little bit more granular on challenges. So let's can you walk us through if you ever had a specific case that almost failed, and how did you sort of manage that? What turned it around?
Well, I think the key for any of these cases, for me, again, I have a case. We have a case we're working on, a larger case we're working on right now, and that case looked like it was going to go away, but we kept planting seeds for that, for getting it done, and it finally came aboard. So that, for me, it's always a matter of planting those seeds in our group side, reminding them that we do it, because too often they don't do what we do,
Mhm.
and when it comes time to needing it, whether it's 6 months from now or a year from now, if we're not in their queue, they may forget that we do that and they go someplace else. So I always want to be in their mind as far as the long-term care specialists when it
Right.
comes to that. And so the cases that I've had difficulties with, it really came down to just things that got in the way with the company itself.
Mhm.
I didn't think it was going to happen at all, but it would be persistent in reminding the broker or the financial advisor that we need to follow up with this client and get this back on the plate as far as doing something with them.
Right.
And it's just doing, and that's what I do. I just got to be persistent on that,
Mhm.
because, and until they say go away, I will continue to follow up on a periodic basis with them.
Right.
So I don't have anything specific that I know of on the group side that I've almost lost, except for the couple of cases that we're working on now. It
Right.
took a while to develop.
Right. Right. Okay. Let's jump back to product real quick.
Yep.
The product we've been talking about, we've been referencing, is the standard.
Yep.
It's a hybrid. Long-term care. We call it long-term care with life. Some call it life with long-term care. But that life chassis is there. What do you have any trouble explaining the concept of that?
I don't. I have, when we first started with this, and I got involved, by the way, with the buddy system when the CARES Act happened in Washington State,
Mhm.
and I had never done, besides a few cases I did a while back with the other carriers. I really wasn't involved in group long-term care cases, and so when I heard about this, I said this may be a big thing. We got to get involved in this and learn about this. And you guys were a wonderful education tool for me. You've developed the program as we progressed for the last 3 years in a big way where we've come. And for me, it's a matter of, I don't have any problem because I've been life licensed for a long time, before long-term care even. So I have no
Mhm.
problem in talking about whether it's a whole life, universal life, or a term. And
Right.
we had never had in our world, my world, term to 100, term to 121. That was never around.
Mhm.
And so having that is a nice feature as well, for clients that want to lower their costs. But overall, um, I love the product because of that, and I have no problem explaining. And with Allstate, the standard plan,
Right.
having a benefit that we have for most states, that has a benefit that will be there no matter what, versus the Trub and Trustmark policies that reduce down at a certain age on a certain percentage, is a nice feature to have. So I can say this benefit's going to be there no matter what you use on long-term care. I
Right.
can explain the other plans as well, but it's sweeter to say it's going to be always be there for you no matter what, and you have a multiplier of benefits in regard to long-term care on top of that. And having that 5%, especially for a 30-year-old or a 40-year-old, paying $10 or $20 or whatever it is a month, and having a $15,000, $20,000 benefit at age 70 is
Right.
it's huge.
Right. Right. For those of you who maybe are new to Buddy, there is we call it the portal. It's the Buddy system. You can go in there, and if you're technically doing business with us, you can get a free membership into the Buddy system, which gives you access to all the tools that Dale is talking about, and you'll be able to see what's available, and it's easy to understand what's available in what state, and put in some basic demographics into one of the tools, and it'll give you a good sort of snapshot of
And I know Jason's shown this many times, the
Mhm.
calculators.
Yep.
That is a visual. That's just terrific. And I know we got some new calculators coming out, but that calculator really helps tell the story when we're talking to somebody.
Jason, do you want to pull that up real quick?
Yeah.
Do you mind?
Sure.
Let's do that real quick, because some people may not have seen that or forgotten about it.
And I like that we have them on the Product Buddy looking at the plans and putting your information in and figuring out what plan we're going to go with.
Yeah.
That is great. And I use
It's out a PDF and you're good to go.
That's right.
That's the
So-
calculator. Yeah.
Yes. This is our calculator. I think the greatest thing that this calculator can do for just your overall knowledge is comparing carriers or comparing different plan designs or benefit amounts with the same carrier with each other. So if you are looking at the standard and you want to see how the term life with 5% compound in Michigan and Wisconsin compares to the whole life 5% compound in California and Utah, you can absolutely do that. If you're working with a large group and you say, well, I am going to be working with Chubb's EOB too, because this group is over 2,000 lives, and I want to see how that compares to Trustmark's Life Plus Care, for example. You can do that. I think this is probably the first of its kind tool where you can compare these products side by side. So whether you are numbers inclined or not, we try to give you as much information as you may want if you are numbers inclined. If you're not, you can be very much like me and just kind of look at total premiums. Whoa, our AI advisor is getting squirrely on me. You can just kind of look at the multipliers, right? At the end of the day and say, why is there such a stark difference in value? Where is that coming from, right? And Product Buddy I use on every single potential case that I have, no questions asked. So Dale, I know everybody uses the tools differently. If you have different value that you get out of this calculator versus any others that we have.
No, and I use this all the time. And the key for me is I know the average claim is around 80 years old or whatever. So typically I will toggle to that and show them what 80 looks like. And my goal here is to say, you got a $25,000 death benefit. And over that time from 45 to 80, you put in $15,000. So, the good news about there's a crossover point at some point. And obviously being 45, you're young. Mark, you're still young. Don't worry about it. And Jason's much younger. But for us older people, this is a nice little calculator to help us figure out is this a fit for us in whatever benefit it is we're looking at for group or individual stuff. So on the group side, comparing plans, especially with the school districts that I'm working with Unum, it's nice to be able to throw in the Unum plans that were offered at one point that went away on February 1st. And we can do it with most policies that are sold. We're not with inflation. And so we can look at that and figure out, can we do something on it, on the policy or not? This is what I use all the time to figure out what plan we go to. Do I use Chubb? Do I use Trustmark? Do I use Transamerica? Do I stay here with the standard policy? It comes down to the size of the group, obviously the demographics of that, and everything else you're looking for. But this is what I use all the time when it comes to it, showing it on a webinar or a Zoom meeting with somebody and showing them what it can do. And then I would do a census quote for them through the group as well, and show them that as well. Not maybe on this call here, but later on when we do a presentation to them.
Yeah,
and show them
that's a
what the
question I
cost
was
is.
going to ask you actually, Dale, is I know at least one of the cases that you're working on right now is a case that previously was offering Unum to all of its employees, new hires,
Yep.
funding the plans. So I just want to get an idea of how you are navigating the conversation. We had a study group about it a few months back where we kind of talked through, here's how we lay out the information, here's how we navigate the conversation, but interested to hear your perspective on working those types of cases.
Well, the good news about those cases is that plan ended. When they were still alive, it was hard to have that conversation because their premiums are so much less than the plans that are being offered today. But that plan is now gone. So the new employees, can't get that policy anymore. And if you got a school district or a company that's offering benefits on Unum, and now we got a new plan, what is out there now? Not what was out there in January, but what's out there now that you can offer. And we don't know what's going to be offered down the road. Every week we have new plans, new offers. So, in the individual world, you're always worried about a new policy series coming out, which had new higher rates. And so not only did you age 3 years waiting and procrastinating on that, but now you got a new plan with new higher rates on the plan. So on the group side, it's a matter of what benefits are out there now. What can we offer? Are we going to have GI? More than likely, yes. Are we going to have SI? Maybe, maybe not. Is it employer funded? That's a big thing. And I try to get all my groups to do a base policy funded plan. Doesn't always work. But if they're doing that with their employees and making contributions, that's why initially when we talked about contributions on employee benefits, if they're really having a rich benefit with their employees, they may very well jump into this as well and help them out with that. But on this side, the school districts do offer that. They offer a base policy. So it is transitioning from what they had, long-term care only, no inflation in most cases, and going to the hybrid policies, and then let them explain what we have as far as that benefit is concerned. And they loved it. Both an agency that we're working on right now, as well as the school district, they're looking at that and deciding what they're going to do, and getting the application done. And so we'll see what happens with that. But that's what we're working on right now. Yeah.
And we have a question in the chat from Chris. I know we talked about school districts, but he was wondering what have been your best markets beyond that, if there are any that really stand out to you?
Me, right now, when I'm talking to my agencies that I work with, it's insurance agencies. These guys need benefits and they understand insurance, and it's working with property casualty agencies and having them do it. Or just, again, a company that is offering good benefits to their employees, that care about their employees, not a small company that it's only the employer and the spouse, and that's pretty much it. It's a company that has, 10 employees or 15 or 20 employees, and they care about these people, their family, if you will, as far as employees are concerned. And they want to offer something rich to them to have that because somebody in that family of employees had something happen to one of their loved ones, and they know that they've heard the story, and that's the key. They've heard the story.
When you said that, it reminded me of something that I wanted to bring up, and either Dale, either you or Jason can address this. But when you are talking about the smaller groups, because we can go down to groups as small as 3. Um, how do you bring up employer funding? What's a good process for that? Because that's huge. That's huge for the
Well,
close of the sale.
we want to have the best possible offers in the future as well. So when I have a group that says we're just going to do voluntary plans, and I have one right now that's the case, I want to have as much participation as possible with that volunteer group because I want to make sure that we're going to have a good offer down the road as well. So I'm trying to get employer funded with everybody on a small base policy because we know that'll be a given, right? Everybody gets 25,000 or 15,000 or whatever the figure is. They get that benefit. They have something. We know it's portable. They can go with them, but they have that. So the key is really that for me is it's employer funded is everything because it helps the company, the insurance company. It helps us, the Buddy INS, and it helps the broker as well on the sale. Without it, it's like a shot in the dark as far as are they going to do it or not when you got 30-year-olds and 40-year-olds. Are they going to even think about it? Because they don't on the individual side most of the time.
Yeah, I think you give a good perspective when it comes to getting that across to the broker. And I think when speaking with the group, especially smaller groups, what helps is just to say, look, the carriers have established participation minimums. It's something that they are familiar with if they have any other benefits, of course. And I just try to tell them that for larger groups, they're generally going to hold you to like a percentage participation, 5 to 15%, whatever it may be. Small groups, it's great that we get this access to the product, but from a nominal perspective or a percentage-based perspective, the amount of participation they want to see is high. If I'm speaking to a 3-person group, we got to see 100% participation, right?
Yeah.
And so we don't want to bank. And I'm not necessarily going to go into the intricacies of like, I'm not going to be the boogeyman and say they're gonna take away everything if you know, as a 5-person group we get 2 applications. I'm not going to say, oh, don't worry about it if we don't hit the minimums. I've never seen them pull the policies or refuse to issue them. I'm not going to be extreme on either side. I'm just going to say the carrier has a minimum. Minimum almost implies or else. I don't have to put that in their mind. I'm just saying we have a participation minimum we have to hit.
Yeah. And by the way, Chris, on your question also is, I don't know if you do referral sources or not. For me, it's a matter of, you know, for many, many years, it was the agent handling everything. I did the quotes and everything else, and nothing ever went anywhere half the time. And so I had said to them, what I found out in property casualty agencies, independent brokers, or especially security financial people, is they don't either have the expertise and they definitely don't have the time. And so my play with them is, let me be the time. I can do this for you. You hand the ball to me. I'll run with it from A to Z, handle it, and we can do a split on the case for you. So find if it's whatever they're working with. Some agencies have specialty markets they work with, whatever that market is, school districts, construction people, whatever it is. Whatever that source is good for me. I don't have a specialty area that I work in, but I have quite a few brokers that work with school districts. So that's one of them for me right now.
I love that answer you just gave because it's kind of at the core of what we try to do with Buddy INS. It's also at the core of what I'm on these study groups generally screaming about when I speak about anything long-term care specialist involved. And what you just heard was an answer from a long-term care specialist who understands their value. Let me be the time. You know, I'm a handoff to expand your business in areas you do not want to touch, but are lucrative opportunities and are potential referral sources and a way to diversify your business. There's so much in long-term care you don't want to touch, but I understand that you probably realize that it's important protection for people to have.
Well,
right?
and I want to be an income revenue source for them as well, you know, is the key. And so it's really important that they know that. And financial advisors, if they're not doing long-term care planning, and I I really get upset when the financial advisor says, "Oh, you don't need this," which I've heard many times. But if they don't do that, they will lose income down the road because that assets under management will go away when that claim happens.
If you think it's important to implement, to make a part of your portfolio,
Yeah.
I'm sitting right here.
Yeah.
So I have to be
exactly.
patient, Gretchen, sometimes, and just
Yeah.
be persistent, but not overwhelming. And that's why it's when we do these cases and stuff, it's how many touches do you want on this case as far as emails or communication with the client, what's overwhelming and what's not overwhelming. I don't want to be the person that they're going to block every time they see my name. I want them to look at what I'm
Yeah.
sending them.
I have one more question for Dale, if I could, Gretchen.
Oh yeah, absolutely.
So Dale, you've played probably more roles when it comes to an enrollment than anyone I know, or you're at least tied for the lead. But two specific roles that you can serve within the same enrollment, but you have been that sort of account manager for a group before, and you've also been a consultant on our specialist teams that we roll out to larger enrollments where employees will generally be able to ask questions one-to-one that they don't want to ask HR or they don't want to ask on a webinar full of their peers and coworkers, right?
Right.
What would you say are kind of the differences there, or at least your perspective and experience from the consultant side versus the I am pushing this group forward role?
I love the consulting part of it. I love that part of it because it's and most of the calls that I have are not 15 minutes, but still, it is giving them information they need. They're asking certain specific questions on it. It's a success no matter what. I'm not losing on that case, right? It's going to be a success no matter what. And it's helping them out figure out if this makes sense. I actually had a case where somebody called me for an individual, might have been a lead from Buddy or somebody else. And actually they said, well, I have right here, Dale, I have this, and my employer is signing up for the standard. I said, I can talk to you about that policy. And they actually bought the standard policy. It was a much better plan than they were looking at. But I said, you could layer these plans and everything else as well. So when I'm looking at these policies, the key for me is really just the touch, making sure whatever I do is in their best interest, period. I have a very ethical standard when it comes to that. I'm not there because this guy pays more than the other person pays. What fits your situation the best on a group side, or individual side? What will fit your narrative and your plan and your objectives on your life that's going to help you and your family if something was to happen?
I can vouch for the number one, the ethical approach on your end, but number two, just kind of the fun that the consultant side can bring because of just what you said. The objective shifts from all of the things that have to happen to I just need to make sure this person feels good about the decision they are making, whether they choose not to go forward with this plan or they do, right? And that ends up generally leading to people coming to the conclusion that this is a good thing for me to do in most cases.
Yeah.
But just to set it to their comfort and understanding of the plan is really nice because we get a flavor of that on webinars when folks are asking questions, and it's just freeing to be able to say, I just need to impart my knowledge in a way that makes the person feel empowered. I would agree with you.
I always want to make it their plan. This is not Dale's plan. This is your plan. So I got to make sure it works for you, no matter what it is. I got to make sure it works for you. That's my key.
Right.
So,
I want to make sure we get to Chris's question. Going back to when you said you split on cases.
yes.
What does that look like, Dale?
Well, if I have somebody that refers a case to me and I'm working that, different than Buddy on it. But if I have a case that gets referred to me by somebody, I handle it from A to Z. I handle it from the introduction part and the agents and welcome to be on the call with me or in a personal in one-on-one meeting with them. And then I handle everything as far as the product, underwriting, sale, application, approval, delivery, everything. And then we split the case 50-50.
Okay.
So that's what I do. That's what
Right.
I've done for many, many years. I just realized that in working with broker dealers and stuff, they want all the money and you get a small override. They want you to do all the work, get all the money because they're in their corner office, and you get a very sliver of it, what all the work that you did.
Yeah.
And I said, I like joint case work better.
Yeah, isn't that how it works? I'm always used to just getting all the money.
Joseph said you stole his business model.
Yeah, exactly.
Okay. Does anybody have any other questions for Dale? Or Dale, do you have any other thoughts you want to deliver to our audience here? And then, of course, our greater recording.
My only thing is, I obviously was reluctant. I am a paper guy, not a tech guy. I'm used to one-on-one meetings. COVID changed all that. Everything went to everything when that happened. I didn't know about group long-term care for the most part. Usually you hand it off to somebody else when it happened in the past. So I had to learn this. I had to learn the technology. And Mark and Jason and Joe and Gretchen and Sandy have been wonderful. And I always say, you have to repeat my question again because I'm slow, but they will give me a response the same way they gave it to me the first time. And it's very respectful. It's very professional. I recommend them highly on what we do. And they just do a great job, and their cadence and their speech and everything else is wonderful. What you don't know about me that I'll share is I understand long-term care really well. And part of that was many years ago, 15 years ago, I had a stroke. And with that, I realized all of a sudden I wasn't insurable for long-term care for quite a while. And so you never know when it's going to happen. You never know when something's going to happen that changes your life. And it could be you're healthy and everything's great. And then one day something happens, an event happens. And then all of a sudden now you're not insurable for that event. So some of those options will come off the table because of that event. And so having the group GI is wonderful. Having that is terrific.
All right. Jason, do you have anything else you want to cover today? Or
I mean, I couldn't have said it better. I think if you are thinking at all about getting into this market, Dale is the person to look up to, beyond just kind of professional candor and how he conducts himself and how he works with clients. But I think Dale approaches all things without fear when it comes to this business, partially because we have a good relationship and he's learned he can lean on us, but partially he doesn't worry about what might be a little challenging in the middle. He knows what the end is all about and what that means to clients. And I can't send Dale an email saying, hey, Dale, would you like to be a part of this opportunity? And he feels like he's already typing yes as I'm typing the email to ask. So I just couldn't appreciate you more, Dale. You're like a rock for us. And
Thanks.
Anybody has any questions, go to Dale, get a little bit of his experience because you couldn't get a better source.
That's right.
Well, I try to be responsive. That's the one thing I try to be, and that's the one thing I do. And I try to be really good at follow-ups and stuff like that.
And as Mark
always
would
hit
say,
the mark, but I try to be.
As Mark would say, 90% of this business is showing up and being responsive. So, yeah. Dale, how can people connect with you?
They can just reach me at dale@buddyins.com. If they want my cell phone number, I'll give it to you. It's 805-490-7621. And obviously, when I email somebody, on the bottom will be a My Calendar link. And you can book an appointment with me if you want to talk. Just talk about what you're doing. I'm fine with that.
Awesome. All right, everybody. We appreciate all of you. Thank you so much for being with us today. And hopefully we'll see you next week.
Thank you.
Be well, everybody. Have a good one.
Bye.
Bye.